Hello everyone, this is Sihan from the Research and Development Department in Market Equity, and in this video I'm going to be talking about the Dow Jones Index, the gold, as well as the US dollar versus the Canadian dollar and their price movement predictions for the day, which falls on a Tuesday, 27th of July 2021. Let's begin with the Dow Jones Index, where we said in the previous videos that by breaking upwards through level 35,093, which is a horizontal resistance level in the 4-hour time frame, the index will continue with the uptrend in the 4-hour time frame as well as the daily time frame. The index reached level 35,093 and closed above it after retesting level 34,780. However, it failed to hold above it and is currently trading below it, which, due to the breaking upwards being weak, it is expected to continue with the downwards correctional movement to retest around level 34,780 before continuing with the uptrend and reattempting to break upwards through this level. If we notice the daily time frame, then we can see that the index is moving around the upper boundary of the sideways movement in the daily time frame, and by breaking upwards through the current levels or by breaking upwards through level 35,093, it will support the continuity of the uptrend in the daily time frame. If we notice the RSI indicator in the 4-hour time frame, then we can see that by rebounding down off of around level 70, it supports the rebounding down off of the current levels and the continuity of the downwards correctional movement in the 4-hour time frame, which might continue to target around level 34,780. That was it for the Dow Jones Index. Let's move on to the gold. In the previous videos, we said that unless the gold breaks down through level 1,793, then it is still moving in an uptrend even though it is a weak one. The gold is currently trading around level 1,793 after it has formed a peak around level 1,811, which was lower than the previous peak around level 1,820. Due to the formation of this lower peak, the gold is expected to break downwards through level 1,790, and if we notice the RSI indicator in the 4-hour time frame, then we can see that since it's moving around level 40, it does support the rebounding upwards off of the current levels. However, unless the gold breaks upwards through level 1,811, then it is most likely to break down through level 1,793, which in that case will target around level 1,755. And if it does break upwards through level 1,811, then it will then be moving in a sideways movement in the 4-hour time frame and the 1-hour time frame. By breaking down through level 1,793, the gold will then be starting a downtrend in the 4-hour time frame. That was it for the gold. Let's move on to the US dollar versus the Canadian dollar. In the previous videos, we said that the pair is expected to rebound upwards off of the lower boundary of the upwards channel in the 4-hour time frame and the daily time frame to target around level 1.2785, which is the upper boundary of the upwards channel in the 4-hour time frame as well as the daily time frame, and that scenario will be confirmed upon the breaking up through level 1.2595. The pair still didn't break upwards to level 1.2595 and is therefore moving in a sideways movement in the 1-hour time frame, where it has started to rebound upwards off of around level 1.2530, which resembles the lower boundary of the sideways movement in the 1-hour time frame, and will now be targeting around level 1.2595, which is the upper boundary of the sideways movement in the 1-hour time frame, and by breaking upwards through it will support the continuity of the uptrend and the targeting of around level 1.2785, which is the last peak that the pair has formed during the uptrend. If we notice the RSI indicator, then we can see that by rebounding upwards off of around level 40, it supports the rebounding upwards off of the current levels and the continuity of the uptrend. That was it for the US dollar versus the Canadian dollar. Market Equity wishes you successful trading and have a nice day.